Back in 2009, I had dreams of becoming a stock millionaire. I saved up $200 and I thought about the bright future that I was destined to have. But as the years went on, through investing and trading, I learned some really hard lessons. And I wish I would have done things a bit differently. In this video, I'm going to talk about how I would learn how to trade or invest in stocks if I had to start over. The first thing is using a demo account, or what we call paper trading. Using a demo account can be a gift and a curse, and I'll explain why. So what is a demo account? A demo account is basically fake money. It's virtual fake money. It's beneficial in the beginning because you don't know how to trade, you don't know what it means to make trades, so it helps to see what happens when you actually make a trade and the overall process so you can understand the basics. But I didn't take much advantage of demo accounts. The only time I even had a real demo account was when I was trying to learn how to trade options, and I think I had that demo account for maybe 2 weeks, and I got impatient because I wanted to start making money and I jumped right into trading. But after I started doing actual real trading, I started to see just how important having a demo account can help you, because I started to lose money really quickly. So having a demo account is great for you trying out different strategies, to try the things that you've been learning, to see what works for you. The downside of having a demo account is that it removes all of your emotions when it comes to trading and investing, which in my opinion is the biggest aspect for anybody to get comfortable with and to learn is how to manage your emotions. You haven't really done any investing or trading until you use your hard-earned money. The next thing is avoiding trading groups. You have to be really careful with trading groups. It's very natural when you start out to try to find help and to try to find other individuals that are doing what you want to do. So you have Discord groups or certain chats and things like that where there's a group of individuals that are traders. The problem is, in these groups you will probably run into some of the shadiest individuals that you will ever meet, because stocks and money brings out the worst in a lot of people, because ultimately everybody is out for themselves and they want to make their money first. So how does the trading group work? Most times it's from some kind of leader of the group, and this leader will be the one who gives out stock picks. They'll mention that they're interested in a stock, or that they're buying a stock, or they're loading up on a stock. And what tends to happen from there is that anybody that's not really wise to what's going on will start buying into these stocks blindly. So what happens? This kind of turns into somewhat of a pyramid scheme. Anyone that was at the top of the pyramid who already started buying their shares and they've already got a comfortable position at a great price, they'll mention it to the group, hoping that other people will start buying in as well. So if I was to join a trading group these days, I would just use it for information, just to keep up with what's going on in the market. But I definitely wouldn't use it for stock ideas and not stock picks, because most of the time you will end up losing, and whoever started buying first will typically always win. The next thing is starting with low money. I first saved up about $200 when I first started investing into the stock market, which is really not a lot of money, because the lower amount of money that you have to trade or invest with, the more risky your strategies may become, because you want to turn a little bit of money into a lot of money. So if I was to start over, I would save up more than $200. I would sell off some things that I wasn't using at the time to try to recoup some money, try to work extra hours, whatever I needed to do to come up with at least $1,000 or more if I could. That way I can see how to diversify that money, and the percentage gains that I will make on that $1,000 would be a little more encouraging and exciting than starting with just a couple hundred. The next thing I would do is pay for training to actually learn how to trade in the stock market or how to invest. If I have money to invest into the stock market, then that means I should have at least some money to invest for some training. Now obviously there's a lot of free resources that you can use online. I mean, you can go to YouTube, you can go to many different websites to learn how to trade for free, but what you're actually paying for is somebody to combine all of this training into something that you can follow step by step, so that your learning curve can be shortened. And I honestly didn't realize the benefit of this until many years later. I learned things the hard way, and investing and trading the hard way is always losing money. When I could have just used some extra money to pay for some trainers to show me the strategies and the techniques that I needed, outside of trying to learn things by just losing money and trying different strategies that might not have fit me in the first place. Which leads me to my next point. It's better to focus on one market at a time and one style of trading at a time. I would try so many different markets and so many different styles of trading in short amounts of time. And I tried options and penny stocks and big board stock, and this was all in the span of maybe a couple of years, which is not a lot of time to be able to master and specialize in any kind of market or trading, because each market is different and it takes a certain amount of time for you to learn that market and become good at it. Anybody that I know that's a great investor or a great trader, they all specialize in one kind of market. I made the mistake of trying many different things and not becoming great at any of them, instead of just picking one that fit my style and approach and becoming a master at it. The next thing is learning how to manage emotions. Learning how to manage your emotions is probably one of the biggest things when it comes to these markets in general. If you don't learn how to manage your emotions, fear, and greed, you will lose your account quicker than you can imagine. Greed is when you're in a stock or you're in a trade and you're making money and you're getting into your head that if I just hold on a little bit longer, I can make so much more. But then 9 times out of 10, the longer you hold on, the more issues that you run into with that trade, and then you start to lose money. Fear is the exact opposite of that. If you're in a stock and it starts going down, you start thinking of how much money you're going to lose. You need to get out now. Or if the market is going down and you're nervous to buy because you're hearing all the headlines and everything just seems bad. Both of these emotions will not help you make the correct decision. The thing about stocks is that it's typically a herd mentality. A lot of people follow each other when it comes to buying and selling. And this is why you see massive drops in the market and also massive spikes in the market because of this herd mentality. But when this happens, you start to see that the people that actually win are the ones that are going against the crowd. But to go against the crowd, you have to manage your emotions. Going against the crowd will have you making decisions that don't feel right internally. When you see a bunch of red on your screen and you see the market going down, the last thing you want to do is to buy stocks. It doesn't feel natural because you want to protect yourself and you want to protect your account. At least that's what you feel. When the market is going up, when you should be locking in profits and probably selling some of your stocks or your trades, you don't want to, because then you start thinking of how much more you can make. You see everybody celebrating and talking about how they're gonna buy 3 Lambos. It's very hard to want to decide to sell during this time because you don't want to miss out on that either. But the best traders that I know, they don't have any emotions. They can lose money or make money and the day is still the same for them. But that wasn't for me. On the days that I made money, it was a great day. Anything could have happened to me and I would have been fine. On the days that I lost money, it was a terrible day. Everything could be perfect. It could be 75 degrees and bright sun. The weather's great. Everybody's happy and I would be having a miserable day just because I lost money in the market. And that's because of the emotions. So if I was to start over, I would try to get a focused mentality on just following a plan and not following my emotions. So that way, mentally, I can stay strong and I can stay disciplined in my trades and my investments. The next thing is patience. It doesn't matter your time frame, whether you're day trading or you're investing for long term, you have to find patience in whatever time frame that you're using. When I say patience, I mean following your plan and not getting too wrapped up in what you're seeing at that moment. Anytime I was impatient on a trade, whether that be to buy or to sell, it was typically the wrong decision. If I was in a stock that I felt great about and it had a couple of weeks to where it just wasn't doing well, then I would sell it because I was being impatient. I wanted to make money then. But then what happens? You look a week or two later and I could have made 50 to 100% just from being patient. The same thing when it comes for buying a stock or entering a trade. When I knew that there was a better price that I could probably wait on, but I didn't want to miss my opportunity, so I bought in immediately. And then a few days later, you see the stock dropping down even lower to where I knew I should have bought it at in the first place. But there's a fine line between hope and patience. You have to have a plan and some kind of strategy, because if I started to get down 20 to 30% on penny stocks that I was trading at the time, and I'm just hoping that things will turn around eventually, but there's no sign that things will turn around or that it even should turn around, I would continue to lose money because I was thinking, well, I'm being patient. You have to be careful with not becoming confused between hopeful and impatient, no matter what your time frame is. Another thing I will focus on is just realizing that this is a numbers game. Unless you're investing for the long term, if you're making trades and you're making frequent trades, it really is a numbers game because we don't have control over the market. But you have funds and actual people with deep pockets that control the movement of these stocks and these markets. So we could do everything correctly. You can have the perfect strategy, you can have the perfect entry, and you could still lose out on the trade just because one fund or one person that has a lot more money than you do does not see that stock or that trade in the same way that you do. But I didn't understand that. I took every trade as something personal. Like if I was gonna win, that I did something amazing, and if I lost, I did something very terribly and I had to rethink everything that I was doing. But that's not the case. My strategy could have been the exact same on 2 different trades, and one could end up with a big win and one could end up with a big loss just because of probabilities. The next thing is learning how to read charts, at least in a very basic manner. I wouldn't focus so much on the fancy overlays and indicators, because ultimately these overlays and indicators are really just charting more price action. So I will focus on learning how to find support support levels in stocks and also resistance levels in stocks. So that way I know what's a good opportunity to buy and what's a good opportunity to sell. Now this is for shorter time frames. If you're investing for the long term, then you don't really have to stress so much about charts and things because you're focused on the long term. So these daily fluctuations or even these weekly fluctuations don't really impact you much. But if you're on a shorter time frame, you have to be comfortable with knowing the price behavior of these stocks. So here's a website that I've been using for years. When I first started trading, it'll teach you everything from candlesticks to how to read different charts and to see different patterns, and it's all entirely free. This is the only website that I've ever used to learn how to read stock charts, and in my opinion, I think this is the only thing that you'll need also. So that's what I have for you in this video. If you like the video, please like the video and subscribe to the channel for more content like this.